Hello guys, and glad to have you on board again today. Yesterday was an interesting session to start the week, and we basically managed ourselves into breaking last week's low points pretty much immediately. So now that it's done, what matters to me is how do we react out there? Is this the beginning of something bigger? We now have two consecutive negative market tops on the weekly chart time frame, and therefore we could have some kind of a more deterministic and directional set of waves to the downside if that is what's to come, because of course as we would have managed to have lower high points, then we would definitely eventually look for lower low points. That is the questions we've tried to answer throughout the weekly update yesterday, but still the answer we had on Monday isn't yet enough to consider that we're heading toward that direction. So if we zoom into the lower chart time frame, we definitely terminated the bullish cycle, and we might be on the verge to create a bearish cycle right now. So how far could we go is a big question mark. But until then, as we managed to figure out the third range boundary for our chart time frame, which was the topic on yesterday's podcast as well, then yesterday we actually just managed to retrace down to the validation level, which is the support context, the support trend channel. So as we get in here, what we got yesterday is the validation level, which totally matters. And I would like you guys to understand this process, because this is the type of mindset you really need to understand if you go toward trend managing. Okay, so the third range boundary, remember that this is more than anything else the low risk trade in a range. So we've created a first and second range boundary. There was the potential third range boundary speculative area. So what happens out there matters. Okay, this is not the dumb money who trades out there, or dumb money can trade, but this is where the smart money will risk manage their portfolios. So the big question mark in here is, what the fuck have they done? Did they do the simple stuff once again, in which we get to a resistance, we need to risk manage, but oh man, the Fed is still going to be there forever and nothing can actually literally hit the fan. So what's the fucking point of selling stocks? Let's just buy some cheap puts. And that's exactly what has been done throughout the latest few weeks. During this recovery, traders, smart money traders, basically always decided that when there's a possible risk and we need to risk manage, what's the point of short selling stocks? Or even though profit taking or whatever, we just need to take the Fed put and wait. That's the reason why the stock market has such a low volatile response in the US specifically, and more importantly, that's the reason why we had absolutely no bearish response into every risk management area, but nothing just like flat structures. So are we today into one another of those things in which, remember, this pattern just played out so many times in the past, in which we got the third range boundary no matter what time frame the structure was into. We always reached out validation before being invalidated. So is this yet another of those patterns? I don't have the answer, but I have some correlated assets I'm looking at to try figuring out these probabilities. Okay? So you need to understand that what's been done yesterday evening and what we're dealing with earlier this morning is an area of huge interest, because if that's a yet another Fed put, we're probably going to have a reactivation nearby, and that would just be a two sets of wave consolidation, and that's not even called that a risk, and we'll basically get to surge to new historical highs later on. So that is one possibility. Okay, but the second one is the smart money is done with this Fed put. They bought for multiple months, and now they don't feel like it's worth buying anymore, and it's worth profit taking. And profit taking, rather than covering with a Fed put, is a totally different price reaction structure. And this is where we're going to figure out what they've done. We don't know, we speculate, okay? My personal speculation is they are done with the shit they'll probably have profit taken. And if I'm right, then what we're going to see in here is not a V-shaped rebound with a short on VIX and whatever, but instead a market that keeps on pushing to the downside without necessarily falling off the cliff, but just keeps going, okay? So we'll see all about it. What is the technical? What are the correlated technical elements that lead me to believe one way or another? That are the ones we already talked about. I'm looking at the Nasdaq Dow Jones ratio, because if they favor downside move, they will probably keep arbitraging the Nasdaq versus Dow Jones, where the spread is staggeringly high, historically speaking. Okay, but we've also seen that out there is also where we could see signs of the market willing to go one step further into the speculative bubble, specifically on the tech sector. They're willing to buy more and more and more just because there's nothing else to do. Okay, that's one possibility. That would trigger huge risk taking, but once again, there's no limit to a bubble but humans' imagination, and this is pretty fucking much endless. Okay, so looking at this one. Then we have a look at the couple VIX and VIVIX to figure out if there is probability for another Fed put, and there's definitely a probability out there. We're going to get to see this. And finally, I'm having a look at the EURJPY spread because we've seen the dollar deteriorating, definitely have seen that, but I wish we see that deteriorating in the yen rather than the euro, which is now pretty much overvalued in the short term. Euro needs the range versus dollar, but USD JPY has a freaking shit ton of area to work around to the downside. So if dollar has to deteriorate furthermore, I think this is against the yen, which could be fairly bearish for stocks. Okay, so that's the thing we've talked about yesterday. Now let's have a quick look at all of these. EURJPY yesterday, oh man, no bearish, that's a bullish day. So even though stocks consolidated and actually broke a support, EURJPY didn't follow that path. So it is clearly not bullish either, because this definitely looks like a trend. 3 days in a row pushing lower after several days trying to push up. We can definitely see a 2 sets of waves out there if I was zooming in. So the thing is that we had a reverse on volatility boundaries, okay, negative moving averages. So this could be a trend follow opportunity. And I see what could be a trend wave, consolidation wave. So I'm still forecasting that some more downside potential is down the road for this asset. We've reached out validation on the support trend channel and it didn't react bullish. So it's really leading me to believe that whatever we're doing out there can either be just a range in which we'll find some very nice short selling opportunities later on, or this is just a flat consolidation before pushing further. I would definitely favor the second option. So I would say EURJPY is just ready to go the fuck downside, but we don't know it yet, and I just need it to show it to me. So until we manage our prices on top of this area, I would say we're pretty much neutral, and it would be too aggressive to consider this a one battle. But if we ever retrace down there, I think huge probabilities for a breakdown coming along the way. The moving average is negative. This context is very less likely going to be a support. So this volatility boundary probably isn't going to be as well, as we rejected the upside one. There's probable trend coming later on. So I see absolutely no support on the EURJPY. But the question is about timing. Is this right now, or are we going to range for a much longer period of time before actually figuring something out? Okay, so yesterday didn't give me enough of an answer to consider that we're really going for a trend, at least not in terms of yen behavior. Then if I have a look at the VIX, the problem yesterday is that still the same old fucking pattern has been at play. Okay, remember this day in which we broke a trend line. We always saw, I saw this and I thought, yes, damn it, we finally get it. We have a breakout. We're gonna go right there and eventually even breaking it up, but didn't ended up that way. We had the crazy fucking Fed put, that one way I've rarely seen this, okay, but we had yet another Fed put out there. So the question I'm wondering today is this yet another of these days in which we break a trend line, but actually we'll fail to sustain prices out there and we'll get another Fed put? So this is definitely an area of interest in the VIX. Just like we figured out, we're closer to very dangerous switching points. Either EURJPY, VIX, and VIVIX is the most staggering one out there. Okay, just have a look at VIVIX. You'll figure out the beauty of these trend lines. Okay, so this is where the battle is at right now. Though, can we have one more push to the downside? This is probable, yes. But I also figure out that we have a mature structure out there. It is a downside trend, which means normally in here, people will not support this resistance, and normally we should break it. So VIVIX is favorable for an upside breakout, but needs to be proven right. And so far, the only thing I see is a huge trend line, and this is, until broken, a resistant trend line. I feel like the odds for this to be broken are fairly significant, but I need to see this. So until the VIX breaks up, until VIVIX breaks out of this structure, until EURJPY remains pretty neutral, even though it's neutral bearish tainted, I cannot forecast any more bearishness than that. If you have a look at the Nasdaq to Dow Jones ratio, yet it's going right. It's going well, it's going to the downside, but yet again, in here, we're dealing with a supportive trend line. So a lot of things could happen today if their market is going for a typical Fed put structure. And in that perspective, simply no one will sell the support. Some aggressive market makers selling cheap puts will eventually get to buy some stocks to push prices higher, and we'll get these good old V-shaped reverse into the stock market. But until then, very, very dangerous structure out there. So the only thing I could tell you and how to react into these nearby areas is, first and foremost, don't have a look at charts in anything shorter than 4-hour chart time frame. I'm not making any intraday trades nowadays. I didn't have enough signals to consider a breakdown a trade yesterday, so I didn't took it. So today is more about how do I deal with the shorts I took out there. Do I partial profit take them or not? So far, the only clues I have is, Jesus, motherfucker, I need to let it go. So I'm not profit taking. Maybe once again, I'm making the bad decision out there, willing to risk take and not profit taking then, and eventually going to make the only mistake out there, which is going to cost me the gains, okay, which is one possibility. I'm willing to take that risk. Okay, so I'm really wondering what the fuck is going to happen out there. I'm looking at the market just once every 4-hour closing candle. End of the story. And if I see the market keep on pushing to the downside, that would be a significant confirmation trade for me. And in that perspective, if we manage to close 4-hour candles into the lower 50% of the context, you know what I'm going to be doing. I'm going to reinforce. So this is where I think things matters. So far, we're failing this. We got validation. I'm willing to see confirmation. And in order to do that, we need to see prices keep pushing to the downside. So it could take a longer period of time that people expect. I don't necessarily think that a massive switch toward huge volatility is the way to do. But I think instead what we could see is a market maintaining itself into this area eventually. But I don't think we're going to massively break the 30 area. But we could just stay there. And the volatility remaining high means people not willing to cover using derivative markets. And if that's the case, then normally we should see an S&P 500 doing this and getting into closing into the lower 50%, which is what I care about. Okay, so until then, I'm looking at the market, not positively active in the market, because I think it's way too blurry to consider reinforcing closer to a validation area. But this is really looking good to me. I just need to see the derivative contracts, the multiple derivative contracts I'm looking at, to confirm. Until then, speculative and don't be dumb. We're in supportive areas. If you're short selling aggressively today, you're taking heavy amounts of risk. Of course, if you do it 3-minute chart time frame and stuff like that, this could totally work out, but be cautious. Okay, bye guys.